My name is Clyde Russell. I work for Thomson Reuters as the Asia Commodities columnist. That means that I spend a lot of time thinking about China. I'm very happy to have next to me Jean Dong, who is the CEO of the Australia-China Belt and Road Initiative. Basically, Jean works with a lot of our state and federal governments in order to facilitate basically deals between Australia and China. And we're going to talk about Belt and Road. One of the things I always do when I'm in an audience with Belt and Road, most people understand that this is a high-level concept of the Chinese government. It is China's sort of outward foreign policy, economic policy, all sort of captured in one slogan. But it's really sometimes a bit difficult to understand what it really is. What I actually ask people in the audience is, what is your top 3 Belt and Road projects? What are the ones that you are most interested in? And it becomes quite a challenge if people sort of think, okay, what are my top 3? What do I actually know about this? We all have heard of it as a sort of a high-level concept. But is it more than just a marketing slogan? And how can you get involved? And that's the kind of thing that Jean and I are going to try and talk about. So I think it's best basically to hand over to Jean and say to her, the simple question to start with, what is Belt and Road?
Sure. So, like Clyde mentioned, I want to keep this very mining and resource focused because Belt and Road covers a very broad topic. So in my point of view, so right now, Belt and Road is China's most important outbound trade and also investment collaboration initiative and also guiding principle. And how that's that relevant to the mining sector? So the key and the most important foundation of the Belt and Road is infrastructure building. So China has committed a 10 trillion USD liquidity to support infrastructure building, and those infrastructure development will drive demand for mining products, services, and also gonna drive the really good opportunity for construction, engineering, risk management, project management companies. So I think that's the real opportunity. If you think about the whole Belt and Road, why that is relevant for mining. Just want to share you a quick data. That is, the China Development Bank so far has supported 600 the Belt and Road related infrastructure project with credit loan of 130 billion USD, which also have driven China's 2017 iron ore import have exceeded 1 billion ton by a very comfortable margin, breaking the 2016 record. And also, in the longer term thinking, BHP predicts that China's steel production will push towards a peak in the middle of next decade, driven by the BRI 400 core projects will cost an estimated of 1.3 trillion USD. And this demand will boost the steel demand by about 150 million ton over next 10 years. So I think, thinking about those numbers is really, this current infrastructure gap, facing the whole global challenge. And also China's commitment to do infrastructure, I think will, really driving the commodity side demand.
Yes, it's interesting. At a recent event I was in Hong Kong, one of the speakers said, right now, Asia commits about $700 billion a year to infrastructure spending, Asia as a continent, and that is about half of what is actually needed. So a lot of what is actually going to come in the next few years is those kind of projects. And if you look at it, there are huge opportunities for companies to get involved in that sort of thing. How would you recommend that Australian companies seek to actually get involved in Belt and Road?
Very good question. I think a couple of things we recognize. So I think just before I answer how, another thing I like to mention is not only for the commodity demand increase, but also you probably all heard about China has committed a massive policy pollution commitment aimed to improve the current environmental challenge and also aim to improve the quality and efficiency of the mining, and also to reduce the carbon emission as well. So I just came back from China late in March, where there is a huge demand for technology, innovation, maths company, which can help China improve efficiency and the quality, especially area in the like the clean code technology, green mine development, digitalized and intelligent mining, and also ultra deep land exploration, those areas. So I think that's where I actually see Australian company have a very unique advantage, because Australian company have a very world-leading service, knowledge, innovation, which could be really good partner with China. And also thinking about the whole mining sector, I think from my perspective, the opportunity is not only in China. So the Belt and Road currently covers more than 125 countries. So a really good model for Australian companies to think about is the third market collaboration. It's where the Chinese company could partner with Australian company to do investment or open new exploration or mine in a third market, where like Mongolia, South Africa, America, and also Central Asia, those key emerging sector. So I think that's very, very important. So coming back to the question about how could possibly get involved, in my point of view, through last 2-3 years engaging with Australian top leading CEO, I think there are 4 steps. It's very, very important. Number 1, before you go to China, before you get too excited about this 10 trillion opportunity, actually to think about what is your unique and your globally competitive advantage. Because when you involve and pitch for the Belt and the Road projects, you will facing global competition, not only from Australia, from UK, Germany, all around the world. So you have to be able to articulate to the Chinese government, the industry body, or your Chinese counterparts, the 1 or 2 things you do really, really well in the whole world, compared with your competitor. I think that will give you an edge and a niche to focus, and also make you very competitive. Secondly, I think like me and Clyde was talking about, and I have to also acknowledge right now the funding process, approval process, government responsibility of the Belt and Road is still very puzzled. So I think also you need to make some effort to understand who is the right department for you to talk to, what are the right funding institutions. Apart from the Asia Infrastructure Investment Bank, also China have Silk Road Fund, China Development Bank, Policy Bank, provincial government funding, city level government funding. They all have different focus. What is the right one for your project? That's very key to understand. And also, what are the key Chinese company right now have got approval to deliver Belt and Road projects, and those companies are more likely to be your early stage partner. And number 3 is to actually build a real relationship. From my perspective, that Chinese business partner wants is long-term profitable partnership rather than transactional business. So I think it's very, very important, to collaborate, with them from a long-term point of view. And also, I found is the, Clyde probably agree with me, is to it seems very obvious, but I think we need to make more frequent visits and also travel, and also exchange with the Chinese counterparts and to receive the first-hand information. I think if you are a mining company and a resource company, you need to go to China, actually talking to the Belt and Road Planning Agency, the National Development and the Reform Commission, to understand over the next decades what are those real projects, the planning process, and what does that mean to your forecast, for your investment, your project, your exploration. And if you're actually looking for Chinese investment, like I mentioned earlier, you need to go to China and actually talking to those key funding institutions, understand what's their assessment criteria and how your projects could fit in accordingly. And then, if you are a service company, from the mining and the metals sector, you need to go to China, understand what's the latest and the very tailored, specific customer services they want, and how you could pitch, your competitive advantage to them. So I think, that's very, very key to make those real relationship and to, thinking for the longer term.
One of the things that struck me, I visited Kazakhstan last year to attend a mining conference there, and virtually everyone I met who wasn't a Kazakh or a Russian was an Australian. And there were a surprisingly large number of Australians exploring for minerals in Kazakhstan. So I think the question I'd like to sort of pose to Jean is, yes, it's a good idea to get out of Australia if your company has the ability to do that. But where are the countries with the most opportunities? In terms of Belt and Road type of projects, where are the Chinese looking to do most of their business?
Sure.
Because, I mean, we've talked about $10 trillion, which is just a fantastically huge amount of money. We've talked about 125 countries.
Yes.
I'd like to try and narrow that down a little bit. You know, what is actually being done now? Where are the priorities right now?
Sure. Yeah, no problem. So I think, according to the Bloomberg data, in the last 3 years, Singapore is actually the country received the most of the Belt and Road investment. And also more than 50% of the Belt and Road projects in the last 3-4 years being focused on infrastructure and also energy. So I think that's quite consistent with our talking about infrastructure is the key development. And also from the infrastructure perspective, so the key country and the key region will still be more around the developing region and the more undeveloped region. And where probably there will be more risk involved. So therefore, when the company assessing those projects, risk is also a very key sector, a very key factor to consider. But also on the other hand, in the very first year when we took 20 Australian infrastructure CEO went to China and met with the Chinese Ministry of Commerce minister, and he brought up a very interesting perspective. Is he said, lots of people thinking those key projects are, indeed in more risky region, but also, how the Chinese company see Australian company could play a role is actually not in those risky region. It's they actually wanting see Australian company to be a partner to go to English-speaking countries for Chinese company. Because Australian company understand the legal, the operation, the culture very, very well, with those region, and already have very strong presence, operation experience in those countries, and where it could be a very good natural partner, for the Chinese company go to like a UK or other English-speaking country. So I think that's also quite a new perspective, from more partnership building, knowledge collaboration, service collaboration perspective.
Yes, I suppose that would also bring in Africa as well.
Of course.
Quite a number of English-speaking countries in Africa. If we're sort of looking at Belt and Road projects, we've talked a bit about the infrastructure. What do we actually mean by that? Do we mean rail projects? Do we mean the mines associated with new sort of battery metals? I'm trying to get a handle on where you see the priorities of the Chinese government and the major state-owned enterprises.
Sure.
What are they looking to do first?
So I think so. The first step is more about building like roads, railway. So the logic China follow with this Belt and Road is better built infrastructure means faster transportation, means closer connectivity among those regions, and then therefore the trade can be boosted, and then therefore tourism, education, and people-to-people exchange. And then on top of that, China needs to mobilize more and more private funding. Like we mentioned before, according to the McKinsey, the current infrastructure funding gap is 60 trillion USD. So by China itself, it's not enough. So China has to mobilize more and more funding to support its long-term growth. So I think definitely, if you look at the last couple of years, it's very much around building railway, high-speed railway, and also like roads, to more undeveloped region, to bring up this transportation infrastructure. And then in the last 2-3 years, and you will see more around the oil pipeline building, renewable energy, and also the energy sector involvement. It's also in responding to the China's current this environmental and also the pollution policy. But I think over the next few years, infrastructure being the key foundation. And also you will still see more collaboration around technology innovation, because those areas would actually improve the quality of the infrastructure and also the quality of the project delivery.
And One thing, I mean, I'm a markets guy, so I like to look at, how much extra is this going to mean. We've talked a little bit about additional steel demand. So which other commodities do you think are the ones that stand to benefit the most as this sort of Belt and Road infrastructure spending is rolled out? I mean, I can think of obvious winners being steel and copper, but what else would you think is something that would be a potential winner from all this?
I think as we already see in Australia, lithium being a really big a beneficiary in the last 18 months. There's been huge investment from China into the lithium the sector, and also even lots of people might think clean mine or this Belt and Road, this pollution policy, the coal actually going to get reduced. But I think according to the recent the Chinese Ministry of the Land and the Resources, they actually said it's not about less coal. It's about better quality. So I think they also actually do not see there will be a huge decline in like the coal demand, but it's more about how do you improve the efficiency.
Yeah, coal is a fascinating thing because in some ways, if you're looking at the seaborne market, it's becoming a scarce commodity. There's very little additional tons being added to the seaborne market from either Australia. If you look at the woes of Adani, they're trying to get their mine up and running and they just can't get any funding. And they're also having to deal with tremendous green activism against them. Indonesia, I was there last week at a coal conference. The basic message from there is that the government wants to reserve more and more of their coal output for domestic use. So they're going to, over time, struggle to export any more. So the seaborne market for coal is actually tightening at a time when quite a lot of countries are building coal-fired power plants still. Pakistan is gone from importing 2 million tons to about 10 million last year, and by 2020 it will be doing about 20 million tons. So as much as coal is problematic from a climate perspective, there's probably quite a lot of opportunity in coal alone.
Absolutely, yeah, and I think also come back to another question is the through our engagement with Australian business. Also, people often talk to me when they engage with China. A key problem for them is the market is too big. Who is who? It's too many people and it's too many companies. Who is the right people for them to talk to start with? And then secondly, sometimes they found when they go to China, they sometimes get stuck with entry level or like the middle management level. Sometimes the conversation or really good projects wasn't being brought to the attention of the key decision maker. So therefore, the process of engagement is very slow, and also sometimes you're sitting there for too long and make the Australian company actually missing some of the opportunity cost. So I think that's also a key problem we see. When actually Australian company trying to engage with China, finding the right people and also cutting through to the right level to be able to gain a really good attraction. So that's why every year we're taking about 30 to 40 Australian CEO from Australia and help them to go to China, meeting with more than 100 CEO chairmen from the China largest SOE and the private company to have a real conversation. I think this is very, very important because lots of those companies they recognize Australia is their natural go-to country for import and also and also for the commodity, but they don't necessarily think for mass innovation technology. So I think it's also very important for Australian company collectively raise the profile, articulate the capability and also the really good services we have here, to the Chinese counterparts, and to really raise a really high priority, for them, when they engage with China.
But perhaps we can actually just give a couple of examples. I know from your past that you have been involved with the deal between Tasmania and the Chinese province of Shanxi for agriculture commodities. Yes. Are there any others that would give the audience an idea of companies that have had success in reaching out to China and they've managed to do what they want to do, build a long-term relationship?
Sure. I gave you probably two examples. Maybe we focus one big company and also maybe a smaller company. We can talk about how big corporates engage and also maybe how SME could engage. So in Australia, like SMAC and also Woolley Parsons, they already have involved in the Belt and Road projects. That's very much benefit from their long-term investment into China through their China operation and through their China partnership building. And also how they get involved is not to say, I'm gonna have a whole massive project, 10 tender by ourselves. It's very much, through identify a niche market. So for example, how can they improve the risk management, and how can they, provide the world leading engineering services to existing Chinese counterparts or existing Belt and Road projects to improve the overall the quality. So I think that's also focus on the niche part is make you very competitive. And also lots of the smaller or startup company might ask, say, how can I get involved? But just by yourself going to China, engage such massive scale projects could be very risky and costly. And most of those companies don't have such the capability. So recently, I come across a really good Melbourne-based startup being around for 12 months, and then their specialty is the visualization of the the 3D printing as well. So what they've done is they actually approach one of the leading Australian engineering company and play their niche market is to use this visualization technology, helping this engineering company to reduce their cost, develop the model, and also the initial product. And then by partnering with this engineering company, and then through their massive deal with China, and they get a really, really good profit and also additional revenue. So again, you don't have to go to China if you are a startup or SME by yourself, but maybe picking the trusted partnership from Australia. But come back to all of those points, you have to really have a one or two niche market competitive advantage to focus where you could stand out from the global competition.
Indeed. I'd like to open it up to the audience if anybody has any questions that they'd like to ask Jean about Belt and Road.
Thank you, Jean. Stephen Grocott, Clean Tech, a company starting up a nickel cobalt scandium project. I just came back from China on Saturday night after having met some Chinese engineering companies and seeing a lot of the projects around cobalt, nickel, lithium-ion batteries. Very impressed with the capabilities in China. So there's a benefit from Australian companies in partnering on the engineering and technology side as well. But one thing that concerns many companies in the West is where they do have a competitive advantage is how they can put some protection in place around IP and around reducing the potential for leakage into other competitors that they may have.
Very good question. Yeah, very good question. So IP is definitely, IP risk is key risk to consider. And also probably in the past decades, China probably hasn't had the best reputation in terms of the IP protection. So I'll answer this from two perspectives. So one, from just an IP perspective, in March this year when President Xi Jinping spoke at the Boao Asia Forum, and he made three commitments in regarding to the China for the opening up. One is IP risk. Is China gonna actually put more regulation, law, and the legal to protect the IP and giving more reassuring environment when people actually entering into China? So I think that's more from the IP and the Chinese government specific action perspective. From the Belt and Road perspective, I think while we actually encourage company to consider Belt and Road as the way of collaboration, is you have more protection and also like more resource for you to grab to help to protect your IP, because Belt and Road is being identified as China's most important strategy, and also it has the blessing from the Xi Jinping himself. So he like to see a long-term success and also sustainable development of those projects. And so therefore, the company involved on Belt and Road delivery and those projects being identified as Belt and Road, it has a lot more attention from the central leadership to make sure it run as expected, and also to give more resource attention to make sure you will deliver a successful results. So I think that's why we're thinking people, if you could understand the Belt and Road and having that as your partnership building a pivot point, it will give you more resource you could draw from China for those protections.
Any other questions from the audience? You can always view this as a good thing. It means that you've left them with nothing,
Yes.
nothing to ask.
But so we'll be here for today, and I'll be here for tomorrow. So if you have any specific question, you can ask me. And another thing is lots of people ask me, say we talk about how can we actually engage with China, and we talk about challenging to get the right people in China. How do we actually do that? So to help you facilitate this top level introduction and access for our organization, we are a not-for-profit organization. So every year we take about 30 to 40 Australian CEOs to China, helping them to meet with the minister from various key ministry and also the SOE private company CEO chairman and all the key funding institution under the Belt and Road umbrella. So this year we're actually going to focus on mining, energy, and infrastructure. So if you're interested in such program and how that could deliver, to your company value, and please feel free to ask me after this conference.
I think before we break for tea, there's one final question I'd like to ask you, and it's basically, we've talked a lot about the very large sums of money. We haven't talked too much about timeframes.
Yes.
How much is being spent now? Is it going to ramp up, or is it going to be a steady trickle for the next 10 years, 20 years? How long does this go on for?
Sure, very good question. I actually have some data for your question. So basically, so far, the China Development Bank already supported 600 Belt and Road projects with credit loan of 130 billion USD. China Import-Export Bank will support 1,000 Belt and Road related projects worth around 100 billion USD over the next 10 years. And to ensure the momentum is sustained, the China Development Bank maintains a 500 project reserve worth about 300 billion USD dollars to ensure the momentum is sustained. And by today, the China Enterprise Belt and Road investment have hit 18.5 billion USD in 56 economic and trade cooperation zones in 20 Belt and Road countries, creating around 1.1 billion USD in tax revenue and 180,000 jobs. So I think that's currently what's being done, and also what's the outlook from the project reserve, the money perspective. So I think the momentum will get better and better. China, as a massive country, has sort of stage by stage style of implementing projects. So this year is the 5th year of the Belt and Road being introduced. So according to the Chinese National Development and Reform Commission, in the first 5 years, so the last 5 years, the key focus being on policy coordination. So ensuring China working with lots of government, multilateral, the governmental institution, UN type of organization to ensure there's an environment, a very assuring environment for projects for collaboration. And last year in May, at the China's Belt and Road Forum, presidency announced in the next 5 years, the key focus will change from policy coordination to projects collaboration. So probably over the next 5 years, we'll see more projects, information, and hopefully more transparency about the tendering process and the pipeline information, make people, feel more comfortable and more confident in engaging in this initiative.
Well, thank you. I think we'll probably leave it there. We'll break for tea. I'd like to thank Jean very much for joining me on stage, and for the audience for sticking with us. Thank you very much.
Thank you.